Hey guys, this is Bruce Marshall from Simpler Options doing the nightly video for Wednesday, March 29th. I've got the three indexes. I want to start with comparing the indexes and kind of where we've been the last couple of days, and then we'll drill down a little bit from there. So I've got the S&P. This is a 5-day chart here, 5-day 15-minute chart here, and as we can see, we have come back up here to the 2363 area, and again, I'm just looking at the charts in general over the last 5 days. Obviously, we're trading all the same. This is the Russell, this is the Nasdaq, and this is the S&P, all looking the same. Kind of bounce pattern here. The strongest of the three, of course, is the Nasdaq, and if you guys saw Amazon today, it was up 18 points. Just very, very, very strong. Looks like it's going to 900. So you always want to be aware of what stock is, any stock you're trading, and what index it trades on, and how that index itself is acting can help or hurt your, the individual stock that you're trading. So always be aware of that. But again, in general, I'm looking at the indexes here. Everything looks pretty strong. We are getting some, this is today, we are getting some consolidation, I guess is the best way to put it, in the S&P. And I want to start right here. Let's drill down a little bit on the S&P. I want to go to a little bit longer time frame. So this is a 20-day chart. And it's I kind of got a chuckle out of this because we hit 2400. This is only 20 days ago, right? And the Nasdaq, or the rally, as we know, in the Nasdaq and the S&P has been very strong. We touched 2400 and then kind of chopped around here for a while. And as soon as this started happening, this was last Tuesday. This the reason I got a chuckle out of it was that I'm reading the press is talking about what a horrible correction and the longest losing streak that we've had and all that. And I'm looking at this, I'm like, that's not that big. And the way to put that in perspective is to go back out here. Let's look at a year chart. Now you start to get a little more perspective of this. And this is what I want to talk about. So 2400, a little chop here sideways, and then this little bit of selling. I think it was eight down days or 7 down days or something like that in a row. It just brought us back to this 50-day moving average. Nothing major at all. But again, what I want to point out, this is a 1-year chart. How many times in the last year have we touched the 200-day moving average? Once, twice, almost touched it there. Is it likely that we touch the 200-day moving average again? Yeah, I don't know. It would take a catalyst for some reason for us to sell off, but it's very possible. I'm not predicting a crash or anything like that. I'm just saying that valuations are still a little extended here. I do think we continue to go higher. At the same time, I do think we might retrace a little bit more before ultimately heading higher. Now, what will happen also? This 200-day moving average will actually start, moving up. So if you look at it here, and I'm looking at that's 2200, 2211. Could it get there? Absolutely. If we had something really catastrophic happen, crisis, whatever, absolutely. In general, we're not gonna get back there anytime soon. But again, we have to be aware of the parameters that we're trading in. The other thing that I want to show you guys and to notice is that this. I use a tick chart and I use advanced decline, but more importantly down here I'm looking at the VIX, and what I'm looking at here, this is a 5-day chart, so we're just dead calm in the VIX. We had this one spike up here to 1511 and then immediately kind of sold back down, and we're back down to 11. We're actually lower than we were. So that being said, very important, VIX down here at 11. That being said, and I'm talking about the S&P in general, I would be looking to honestly be looking to buy more than sell with those, with that backdrop, the volatility is dropping so low and so forth. And the way that I've been saying it in my service bias is, I want to play, the trend is higher. Obviously it's higher. It continues to be higher. I want to play the trend higher with an eye lower, kind of 1 foot at the exit door, kind of watching. for those downdrafts, because they can happen very quickly, just as we've seen. This, we had one pretty swift downdraft there, but we can have these, we can have these at any time. So just be aware of that. Other than that, let me give you guys a trade idea. I like Boeing. I like the defense sector, the Lockheed Martins, Boeing's, Raytheon, Northrop Grumman, and Boeing in particular are very good ones. And I like the sector a lot. I think our risk of the Trump tweets is going away for the most part. So what I want to look at here is Boeing to the upside. What I want to target is our earnings are out here on 426, and I want to look at Boeing. Again, I'm looking at big picture. You can drill down this with Fibonacci or video lines or whatever you want to, but I'm giving you a big picture idea. The trend is higher. I think the defense spending goes up, etc. You could get an April trade. April expirations are on 421, right? You can get an April trade that expires. Earnings are on 426. An April trade expires on 421, so you could get a trade that expires ahead of that. The other thing to be aware of is this volatility down here. Notice our implied volatility. And what will happen, what historically happens, here's the last earnings, falls, rise, going into earnings, right? There's earnings, falls, rise, there's earnings, falls, rise, there's earnings, falls, rise. What will happen here? Falls will rise, going into this earnings. So that bodes well for debit spreads, call debit spreads, long calls at this point. You still got a little, time long calls. Calendar trades, diagonals, anything that has positive vega that will benefit from a price move higher and a vol move higher. And so that's what I wanted to give you the gist of what I'm thinking. And I hope this is helpful. And good trading. Hope this is helpful, guys. And again, watch for the trade to the upside, but be aware of the potential for some downside corrective action. So thanks a lot, guys. I appreciate it.